We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the S&P 500 index, having a full move here in transition from wire Fed borders on December 9th into the end of yesterday on December 12th. And today it continued, but now the shifts have happened back down. Now, even after CPI data, we're going to break that all down in today's video. But within today's volatility, our SPY bot sent out a bear indicator at 9:40 a.m. And from that moment forward, outflows crossed the midpoint to the downside per weakness there on 42 vision, and put options went up 300% plus within hours, guys. If you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to the bots and becoming part of a growing community of investors, receiving this clarity and edge and using these resources to maximize in either direction, whether stocks are going up or going down. So a lot of people were excited today, right, in the pre-market after the CPI data had been released. But why would the market pull back? That's what we're going to break down in today's video, and we're going to look at some key levels. But before we do, I want to share with you guys the home run opportunities that were mentioned this morning over at the Discord. So the home runs of the day were spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity of the charts, check out the link down below in the description to the Discord. And by joining, you'll become part of our growing community of investors, all looking to learn and grow together. So the first home run was from our Tesla bot. Our Tesla bot sent out a bear indicator at 9:35 a.m. From that moment forward, outflows crossed the midpoint to the downside. Pure weakness there on 42 vision. And put options went up 200% plus within hours, guys. And our second home run, we caught this one in the pre-market, pulling downwards and sitting sideways towards the bell. KSPN, we were looking for that bull indicator and those inflows to stay above the midpoint and pick back up. Full strength there on 42 vision, and it hit a highest point of 25% plus, guys. If you guys want to know about these stocks early on in the pre-market and receive this edge and clarity of the charts, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, and the SPY did a complete transition from rip area to dip area in one day on December 9th. And from December 9th till the 12th, yesterday, it did a full transition from the dip to the rip. The rip continued, and so far, we've transitioned down from the rip area, and we haven't hit wire Fed borders. If it's your first time coming across the channel, this is 42 vision. It allows us to see the dips from the rips and the rips to the dips to see where the strength and weakness lies within the charts. And we also use our bull and bear indicators and inflow versus outflow, which I'm going to pull up here and you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together by using these resources to maximize in either direction, whether stocks are going up or going down. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we are with the SPY under a bear indicator and the outflows dominating most of the day until they finally crossed over and the weakness started to become even more significant from around 407, 406 all the way down to nearly 400 to 399. Now the inflows are trying to pick back up here in this dip area and consolidation, and it's going to be important if this inflow can cross back over and there could be resistance levels broken through to continue the next leg up, or if these outflows reject and they go lower and things get right back down to the levels they were yesterday and even the previous days, and retesting that 390 level, which is super important, where a lot of people are speculating that that's where the bears really take over, not just below the psychological level of 400, if not 390. And a lot of people also referring to 400, where the bulls are actually having strength at that psychological level within the charts. We've talked about that in previous videos, and right now we're in a battle here where this rejected off of 414, 410 at open, and those were some key levels of resistance that we were watching even way back here when the market started to run really fast up to 409 and even back here when it ran from 375 all the way up to 395, and those inflows picked up significantly both times. They hit highs here on the inflows of 14.86 and even up here of 16, and today's highs was right up here at 11.59, which I talked about that in yesterday's video, and I pointed out that the inflows were only at around 4, and just based off the history of the chart, it had room to go higher. And if that CPI data came in less than expected, it could get things very volatile to the upside, and if it came in hotter, it could spark some sideways action or a pullback. But a lot of people are asking themselves, why did the markets fall? Well, in my honest, humble opinion, and this is just my opinion and perspective alone, not financial advice, and I could be completely wrong, volatility is here to stay. I've stated that in many other videos, and I'm just trying to maximize within the moves daily, whatever the charts present us. But what happened here was that, yes, CPI data came in less than expected, but guys, 7% or higher is still pretty high CPI numbers, and that's where reality sinked in, and a lot of people are speculating now, and just the markets themselves, as you see it in the charts, they don't know exactly how the Fed's going to react, because while it looks like CPI and inflation's coming down, we just had a PPI reading last week that made things actually fall and sit sideways here. Towards the end of the day, it even went to lows here of 392. That PPI data came in hotter than expected. So we have a lot of misreadings, right? One side of the picture is showing us, right, that things are cooling off. Other sides are like, okay, the cool off happened, but now it's coming back up. So if PPI data kind of had a bounce back up, that could reflect in a future CPI data as well. So there's a lot of gray area right now. Again, this is my opinion and perspective alone, and what it creates is volatility in my opinion. But 410, 415 are critical levels, not just 400, the psychological level that we've been talking about, where a lot of people are speculating that bulls took over, but 410, 415 are critical to where and how far this could go. Now, as long as we stay below that, a lot of volatility in my opinion, and the closer we are to 400, the closer we are to 390, and the closer we are to 390, the bigger chance that the bears are going to take over the charts again, right? A lot of people are also speculating and actually excited that now a Santa Claus rally could be on its way. Now, after CPI, everyone kind of sobered up, which this was pretty incredible, the run that happened in the pre-market, and the markets were showing it since yesterday, and also our bull indicator from yesterday lasted all the way until the open right there. That came up yesterday at around 10:10 a.m., 10:05 a.m., and it was strong all day, and it lasted into today's open. And through that pre-market run until that bear indicator that our SPY bot sent out, and it's lasted all day to the downside. And full transition there as well, right? From bright green down to the dip area here of white with red borders. So right now things are pretty volatile. The markets are trying to figure out, okay, well, CPI data came in better than expected. How's the Fed going to react now? Because we also had a very hot PPI number, and could this be not the bottom or a real slowdown? If not, it could try to bounce back up from here. That's kind of where the uncertainty and doubt is coming from, right? Because we did hit 7.1 and the reading was a little less. But what if next month or a few months from now, randomly, right? And that's where the uncertainty is, even though depending how the Fed reacts, we need to see what they state. We have CPI come in higher than the next number that we expected, or whatever number we're expecting at that time. And we're still far from that 2% goal. A lot of people are also speculating that 2% is too extreme or too far. So some people would even settle to state that a calmer rate is 3 to 4%, which we need to see if that's even true and how the Fed will react to that when that time comes. Right now, we're currently at 7%. So I'm going to share with you guys what are the key levels I'm watching for tomorrow. Obviously, the first support is 400. Below that is 397 to 395. Critical levels there to see how the bull and bears are reacting. These inflows are trying to pick back up. I want to see this come back up and cancel this bear indicator on the 30 minute. On the 15 minute, it's back over. And I would like to see these inflows continue to pull away from the midpoint, cancel out that bear indicator, and start reflecting that strength into the chart. And on the 1 hour here, you could see how things are looking as well. And on the 1 hour, the outflows cross, guys. After getting that strength from way back here at around 395, inflows went to highs here of 13, hit highs here of 413, 414, pulling downwards all day, and outflows just crossed here within this consolidation. So this is going to be very interesting here, whether the bulls are going to be able to pull it upwards or if the bears are going to try to tear it downwards, right? So the longer these outflows stay below the midpoint, the more critical it's going to be. And this is in a very tight consolidation between those resistance and supports. Now, when you look at the 1 hour inflow versus outflow, you could see here it's at minus 2.56, and yesterday's outflows were as far as minus 4.3. So I'm going to be watching that. If it continues lower or finds support and tries to bounce back up towards the midpoint and cross back over it to cancel out this bear indicator. And same thing like I stated earlier here on the 30-minute, as it's getting really close there, and the 15-minute already crossed. So if the 30-minute can be brought up with it, it could start reflecting into the charts with strength there. And I stated the support levels that I'm watching, but the resistance to the upside is 403, 405, and then back up here at 408 where that bear indicator popped up today on the 30-minute chart. As always, guys, thank you guys so much for watching, and let's make some money.